So hello guys, welcome back to another post-market analysis. Okay, and in this session we are going to see what happened in the market and what we anticipated. Okay, so if you have not watched my pre-market analysis for today's date, which is I think 21 Jan Tuesday. Okay, so go watch pre-market analysis and only then come back to this video to see what has actually anticipated. Okay, and what have we actually thought of that will anticipate now. Today I made around $200. Okay, so this is actually the proof of what the trades I took. Okay, so all these trades I took in here, and this is the real execution. So let me just tell you this particular two trades. I took them just to be involved in the market. I buy and sell at the same price so that I get involved in the market. Okay, and I took them off just to not be sure because I know that I was about to take some entries. So I did a buy here. Okay, and I did three buys. Okay, three quantities: point 0.2, point 0.2, and point 0.3, and I took them all off. Okay, but see, it was a little heavy quantity for me, but I wanted to see a little long more, like the price I was expecting to go more than this point as well. Okay, which I anticipated in my pre-market analysis, so watch it out. Okay, so this was just a simple proof of what actually happened. And did I take a trade or not? Yes, I did take a trade. Okay, now this is the point. Okay, these two trade was just buy and sell at the same price just to be involved in the market. This was somehow I got in a video when I was watching ICT recommended me to buy and sell at the same point. Okay, to just get involved in the market. So yeah, it was a very good idea. I was involved in the market. Now let's see. Okay, so we are on the EURUSD chart. I hope if you don't know all of these analysis, then you should actually go back and watch it. Now see, the trades we took on was on GBPUSD. I'll have to first explain the EURUSD and then we'll go with the GBPUSDs. Now what did I anticipate you to do? Okay, why did I take a trade on GBPUSD and not EURUSD? That is also one question, right? I'll tell you why. See, if you go back in pre-market analysis video, this is the drawing. Okay, let me just make it little bit bigger this way. Okay, so this is what I anticipated for the market to happen. I want the buy side liquidity be taken after the sell side gets taken. So this is the sell side level that should be taken. This is the green line which I drew. So sell side gets taken and I want then the buy side to be taken. Now, but I actually just got off the trade, although sorry, it's EURUSD. Okay, so this is what I anticipated and this is actually what happened right now. This is what is actually anticipating. Okay, now at this point of time I would have taken out my trade already. I will not wait for the whole midnight because might be that the trade can reverse from my point. Okay, so yes, I would have taken it all out. Yes, I'll not wait now. This is what I anticipated. So you guys can see, if you go on a small time frame, let me just delete this because everything as anticipated, no need to put it again. So let's delete this. I'll see at this point of time, we can see this is EURUSD. Okay, EURUSD, and this is GBPUSD. You guys can see there's an SMT. Now what is an SMT? Yeah, now what is an SMT? SMT is a smart money technique or smart money divergence. Okay, when there is an algorithm, there's a like change in algorithm. Okay, so the price has been rallying higher in EURUSD and it has been rallying lower in GBPUSD. Now why did I take a trade on what you call it as a GBPUSD? The reason is because see, I can see a very good entry in here. So first of all, this particular low was taken out by this low, so it has more chances of rallying higher than something which has not taken out its previous low. Okay, that is the reason I first jumped in GBPUSD. Now when I jumped into GBPUSD, what I did, so I can see this particular high that is broken. You guys can see this particular high got broken. It got broken. Now I can see there's a order block. You guys can see this, there is a order block. Okay, I'll just zoom it out for you. Okay, so there is an order block. Okay, and this like open and the high of this particular candle, I marked it and I took my entry at this particular point. Okay, so I took my entry somewhere in the middle. Okay, sorry, somewhere, I think yes, at the low of this order block. Okay, so at the low of this order block I took my entry. Okay, there was a drawdown in the price, little bit drawdown. Okay, and I set my stop loss at this point somewhere, uh, yes, this point. Okay, this point I set my stop loss exactly. It was coming out to be around $20. Okay, somewhere I don't remember exactly what the value was because I was actually trailing my stop loss as soon as I was getting my things. See, I trailed my stop loss back to this point because I took an entry here. Then again I took an entry and trailed stop loss back to this point. Okay, so I was trailing my stop loss again and again and again. Okay, so but the initial stop loss that I was about to be taken, if this trade gets into loss and not pans out in my direction, that loss was $20. Okay, now the point at where I got out of the market was at this point, exactly at this. See, this is the high, this is the first high, this is second high, Actually, I was anticipating that this high will be taken. Okay, so it was like, this much. What is around? It's 1 is to 10. Obviously, I don't think if 1 is to 10 is going to pan out, but it has already pan out in my direction of 1 is to 8. Sorry, 1 is to 9. Okay, yes, it's 9. 1 is to 9, it has pan out in my direction. Okay, but the quantity was heavy. I have not handled that amount right now, and I was getting into emotion, and I thought that getting out of trade could have been a good decision. Okay, that's why I got out of the trade. I didn't take any trade further on. Okay, so I just took my entries off in here at this point. That's it. I didn't take much, just 1 is to 4, simple risk reward. Okay, just a little heavy quantities were there. Okay, that's it. I didn't go much higher, but if we went on higher, okay, we could have been targeting this particular high. So this high has to be targeted. But if I was at this point, I would have just taken it out. I don't have right now enough patience to take out this thing. I'm practicing more and more to keep the patience in. Got it? Okay, so that is it, I guess, right? And yeah, so SMT happened in here, and the price this low was taken out by this low. That is the reason I was more confirmative that okay, the price swing can happen from here. But this low was not taken out by this low, hence the price swing has there is less chance that the price swing can take place from this point. Okay, suppose if we could have taken some entry in here, maybe like this point, maybe stop loss at this point, and the high to be at this point. It is just 1 is to 10, 1 is to 10 risk reward ratios. Okay, I think that's it. That is it for today. Nothing else special. Okay, the only thing is that okay, I made this much amount, this is much. Okay, whenever I'm going to take a trade, even I'm losing, even I'm taking a trade. Okay, so these are like minus 4.5. Actually, I try to take an entry and extra thin stop loss at this point as well with a zero point 0.3 quantity, but it didn't pan out. It just swept a little and then it went back higher again. Got it? So that was a minus $4.5 loss while all these things were going on. And I think that is it, guys. Okay, this was the session about my post market analysis. Go watch my pre market analysis to see if I have already said this thing or not. Okay, so this is like Tuesday. The market should pan out in our direction. Now, if this particular buy stops get taken, we'll anticipate for the market to go lower because now the sell stops are being building up. That is it, guys. Take care. See ya. Bye bye. Have a nice day. Keep learning, keep backtesting, keep trading. Bye, guys.